Good morning. Yeah, today I just want to talk about just a little bit about the difference of a venture capitalist and what is an angel. Because a lot of people were asking me, what is it? What is a venture capitalist? Because I talked about it a few times, and a lot of people didn't know what that is. So a venture capitalist is simply an investor who provides capital to startups. A startup, of course, is a small company or a small business which has a growth or a very, which has a high growth potential. So these venture capitalists, they uh, they provide capital to these companies in exchange for equity or I would say part ownership of the company. So they might say, okay, I'm going to give you this amount of money for 10% or 20% of the business. So a venture capitalist, they play a crucial role in the entrepreneurial ecosystem by funding innovative companies that might not have access to traditional money like going to the bank. You might go to the bank and say you want a business loan, but the bank will deny you. But if your idea is good enough, you may be able to talk to a venture capitalist. So they will give you access to funding because of your innovation and your entrepreneurial skills to funds that you cannot access uh, from a regular bank. So they'll be the source of the funding that will help you start up your business. Sometimes getting a bank from a loan is difficult. They look at your credit, they look at your history, they look at what your track has been. But a venture capitalist may be able to take a little more risk, you know, and then work with you because they want a certain percentage of the business. So some of the things that they look for is, well, let me say some of the aspects of venture capitalists is typically they invest in the early stages of companies that are in the process of developing their products or services. So these companies often need significant capital to grow, but have a really high potential for return. So if you have a really good idea and you can't get money from the bank, then you want to talk to a venture capitalist or a CV, in other words. So in exchange for that investment, they receive an equity stake in the company. This means that they own a portion of the business and can potentially earn substantial returns in the company succeeds. So if you succeed, he also succeeds. So the money he put in, he gets it back as part being owner of the company. And they just don't give money to any company. They look at the companies that have a high potential uh, growth rate. So investing in startups is very risky. You don't know where the idea is going to go. So it's very risky. So because of that, a lot of businesses fail. So when a venture capitalist agrees to work with you, he's taking a lot of risk. A lot of them do not, you may come up with an idea, but things happen and then they fail. So the high risk is balanced by the potential of high rewards if the company becomes successful, leading to a substantial financial gain. So you might put money in the company, but it fails, and they do are aware that it may succeed. But if it succeeds, then the risk he took has been worth it. So most venture capitalists are risk takers. So they have to study you, study the business, study the history of your business, and they look at so many things, how the structure of your business before just lending out money. So it's a very risky venture, but very rewarding if it succeeds. So that's why they are there, and that's why they come. If your bank fails to give you a loan, then you might talk to a venture capitalist. So besides providing capital, venture capitalists often take an active role in the companies they invest in. Since they put in their money, they do want to, and they have a portion of the business, they want to take a very active role. They want to make you succeed. They want to make sure this business does not fail so that he gets his money back. So they provide strategic advice. They help in the management decisions, and also they leverage their networks to assist the company to grow. So usually by the time he has that kind of money, he already has networks within the system. And it's probably somebody who's a business person, so he knows what works and what does not work. So he'll give you some advice. They'll also help you manage the management decisions. What do you need to do in certain situations? And of course, because they're part of owner of the business, they will talk to their networks, the people they know, so that they will assist the company to grow. So it's a win-win situation, because you let them, they give you the money, you let them a certain percentage of the business, and then they help your business grow. So what you need to do is come up with that excellent idea that nobody else has ever thought of, whether you have money or not, whether you're a university college or not. Think of that idea, come up with a plan, and show that it's going to work and it makes sense to somebody who would like to put in money and also wants to make money in the process. So venture capitalists also, they typically seek an exit the investment within a specific time, usually through initial public offering like an IPO or acquisition by a larger company. So the exit strategy allows them to realize the returns of the investment. So when they come in, they're like, okay, I'm gonna give you this money for the next 5 years. After the next 5 years, we can make this a public company. Let's make it a big company and make it a public, an IPO. Let's sell the company to a bigger company. So, now the company is too big and now you want to sell it and make a few $1 million. So they also have an exit strategy that they come up with, and it's usually part of their agreement or the part of the plan when you get into the arrangement. And then they may also participate in different stages of funding, including the seed money, initial money, very, very early of the stage of the business. A lot of them want to see that you've done something small, you're already moving, but some of them, if they really like the idea, they'll get in very early. They'll put in their money progressively, slowly by slowly, every quarter, to see how the business is doing. They just don't, if they agree to give you $1 million, they just don't throw in that $1 million right away. So they may have a portfolio approach, whereby they participate in different stages of funding. They just don't give you the whole lump sum, because of course you're a person, you just with a good idea, so they just can't trust you with that money. So they will have that portfolio approach, so that to mitigate the high risk, it's too risky just to give money with an idea. The idea might be, the proof of concept has to be there. So they often invest in a portfolio of the companies. So this diversification increases the chances that at least one or more investments will yield significant returns. So basically, there are crucial financial partners that we work with, especially for a startup company. Then they're providing not only capital, but also expertise and resources to help young companies grow and succeed. And that's how they work. So I urge young people with good ideas not to be afraid to be innovative or think of things outside the box, because some venture capitalists may just like that idea, and then both of you can grow until you're able to get a level whereby you want to sell the company, or you want to make it an IPO, or whatever level you want to do. But if you don't have the seed money or the initial capital or the networks or the connections, I would urge you to look at venture capitalists as a way of starting a business or for your startup. So I just want to say that, because a lot of people have been asking me that question since I've been talking about VCs in the last 2 or 3 videos. So with that, I just want to say thank you for listening. and I hope you got something out of it. And I hope a lot of young university students, especially in the third world, the people who are in STEMs, people who are doing the sciences, people who are doing mathematics, chemistry, physics. If you have an idea, do not be afraid, because you can be networked with venture capitalists out here who are willing to be part owners of that business. I know places like University of Nairobi, there's always people inventing things, but then they don't know how to even write a proposal or a grant. And we can assist you with those kind of things. Or we have people within our organizations who can assist you with writing proposals and grants so that you can have access to this money. So with that, I just want to say thank you and welcome for listening. And please subscribe to this channel so that anytime we release a video such as this, you'll be the first one to know. And then you can share with your friends and family who may need the information. With that, I just want to say thank you for listening and have a beautiful week. Bye-bye.